Hey guys, alright, quick disclaimer, welcome to Ethics Bootcamp. Non-alert service, no trade recommendations. What I will do is conduct some live fundamental, technical analysis, hopefully put together a positive trade plan or two. Bear in mind that trading heavily leveraged, risky. Please do not trade your hard-earned money until you have a track record of success using your broker's play account. You want to turn it up a little bit. So, alright guys, so today, So today, actually agreed with, I caught a little bit of what Sam said, actually agreed with most of what he had to say. Not that he needs my approval, but so guys, I got a presentation called Targets and Triggers today. So what I want to talk about is actually in the moment what you do to pull the trigger on a trade, and pretty more important to that is how you work out where something is potentially going. All right, so this is, I think you'll notice this in your own trading, is that when you're a more novice trader, all you care about is where's the entry, right? And you'll see this a lot. Those of you that attend. Thank you, Martin. Thank you. But you'll see this a lot in if you attend regular webinars. I don't care at what. If you attend regular webinars, you'll see this sort of thing a lot. All right, that you'll always notice the newer trader, and this isn't a derogative statement. I'm just saying this as an observation. You always notice that the newer, less experienced trader will ask a question like, well, where's the entry? Right? And we all want to know that, and that's paramount to your trading success. However, what's pretty more important is, where is the exit? Okay? And I don't care if that's exit for loss or exit for profit, but where is exit stage left? All right? How many of you put more emphasis on entry rather than exit? Obviously, they're both very, very important, but if you don't know where something is prospectively going, how can you look to trade it in a continued direction, or how can you look to trade it in that direction? Right. And as you develop in your trading, you'll notice in your own trading that exit is the hardest thing. Exactly. Aviator is absolutely right. Exit becomes much more difficult than entry. You can find an entry pretty much anywhere if if you have a clue about support and resistance and just general price action. Entry is not the biggest thing in the world. It's trying to find a good place to exit, because ultimately, if you exit too soon, price will continue. If you don't exit at all, price tends to reverse. All right, so it's just, the thing about exit is that you're really wrong no matter what you do. All right, you're mostly wrong no matter what you do. So you just got to be comfortable with the fact that you're gonna be wrong. All right, and that's not really what it's about, is it? I mean, it's about trying to keep your risk reward intact and get out where it makes sense, for profit or loss. No, absolutely try and trade it. But what I'm saying is, down the road you'll see that exit becomes a tougher thing, in my opinion. I don't think that one, because one can improve your entries quite easily. I think it's a whole different ball game to improve your exits. Much harder. Do you mostly use stops, targets, or manual exits? Fernando, I'll have just briefly on that. I'll have a default stop on some stuff, predominantly behind major support or resistance, but ultimately I'll manually exit. Yes, typically. Morning, George. All right, guys. So should we get to it? Okay, so there's two types of let's do entry first, and then we'll talk about targets. All right, so entries. There's two types of entries that I will typically take. All right. One of them is what I like to call a little swing fib trade. The other one is a move fib trade. All right. And the difference is this. Let me try and find a little example for you here. Okay, and like Sam was saying in the previous webinar, is that if you're not happy with the risk reward of something, or if you don't like the setup, nobody's forcing you to trade. So, like anything, if you have a rule-based entry strategy or a rule-based exit strategy, you may still know where something is going. I was just saying this to boot campers yesterday. You may still have it on good authority where something is going and still not be able to take that particular trade. All right? And I think it's important to be comfortable with that, because if you have an entry signal, so to speak, and I've just dropped the air quotes on you there, even though you can't see me, which is silly. Even if you have a rule-based strategy to enter and a rule-based strategy to exit, I'm talking about the actual mechanics of what gets you in the trade, then it doesn't necessarily mean that you have to take, if you in your buy zone or in your sell zone, it doesn't necessarily mean that you have to take that particular trigger, right? If it's not perfect for yourself. Okay, so you guys know that I'm, for the most part, a price action dude, right? We're not going to get into, guys, we're going to get into a little bit market fractal stuff, kind of use of smaller time frames for larger term trades, etc. But we're not really going to get into why something is long where it's long today and why something is short where it's short. Okay, we can cover that down the road. But anyway, so for the most part, I do entries like this, right? So price is tootling down, yeah? Okay, and then you get your directional change of trend. I'll just wait for Hot Tom to catch up to me. There we go. All right, and price pulls back to the previous support, aka supply, which is also your fib zone. I like to call them green zones, right? Simplify these things way down. Okay, and then we want to head up. So we'll call this a 15-minute chart for argument's sake. All right, and you are looking to enter a trade here. Okay, we're going to call this a swing fib, considering that it's a fib of one swing. All right, and when you change your trend, when you change your directional trend, you remember an uptrend is defined by higher lows and higher highs. When you change your directional trend, then this one swing, by its very nature, it cannot be a fib of the whole move. It has to be a fib of just the swing. Absolutely, Ganster. Precisely, yes. So if I'm bullish, I'll buy its support in the context of the uptrend. Right? Morning Microforex. Does that make sense? I'm never gonna buy a breakout. I'm never gonna sell a breakout. I'm never gonna buy its resistance or sell its support. Even if it goes a million miles without me, it doesn't make any difference to me whatsoever, because I've lost my edge. My whole thing in trading is that my whole thing. Why is that, Colin? My whole thing with trading is that I'm looking to buy in green zones, and in the context of an uptrend, not sell at a red zone. No, Praveen, and this is what I want to talk about today. All right. So, and in the context of a downtrend, no, I don't try and trade it. I mean, I won't buy. So, in other words, if price is doing something like this, and it breaks out of it, boom, I'm not going to be longing here. I'll just wait for it to catch up. I'm not going to be buying this. Now, if it comes back down here, that's a different story, particularly if it's happening at a major support zone or something. Now, I'll be buying here, sure, but not buying the breakout of the rise. The risk is exponentially larger. I'll sometimes use a limit order, but typically I allow price action to enter me into the trade. No, to answer your question as far as the break of the high. I'm comfortable missing stuff if it doesn't comply to my strategy. Okay, anyway, let's talk about this. All right, let's talk about this scenario. So we're going to call this, this red box morning bookie is, or evening I should say, is simply the fib of the drop where potentially if it wanted to fail, it could. All right? And, okay, so we're going to call this a swing fib entry. I want to get to, and I'm calling it a fib, but really it's a confluence of all sorts of factors. All right? Mostly previous support. It might be a psych level there. It might be a pivot point. I like to stack the odds in my favor before entering a trade. I think that's important. You know, if you're journaling something and it comes down to, all right, entry criteria, and you go, well, I thought it was going to go up, so I just put in a long. Where if you, think about it being different to, well, I bought the 50% fib of a change of trend off a daily 382 level. There was the central pivot there, the 50% a psych level, and previous support. That's easier to substantiate to yourself than saying, well, I thought it was going to go up, so I just bought it. Right? There's a difference there. Okay, so we're going to call this one a swing fib entry, and then price will typically do something like this, right? And then come all the way back down to this same spot, aka the euro today. And then continue to the upside. All right, and a lot of times this swing fib entry on a 15-minute is simply the swing fib entry on an hourly, but because we're looking at this on a 15-minute, it is a move fib entry. And what I mean by that is, it is an entry, it is a buy zone of the entire rise. Okay, so as this was the entry for this rise, okay, this big green zone here is going to be the entry for the entire rise. Okay, this big green zone is the entry, is the buy zone of this whole thing. Doesn't make any difference. It's a zone for me. The fib, on my charts, I barely even draw the fib anymore, Boyke, because it's simply a zone for me, right? So 382 to 618, it's all game. I'll look for confluence within that zone. Make sense? So you know, if your fib's like this, and you've got a 382, 50%, oopsie, 618. And right around this level, you've also got a previous support zone. All right. And, you know, you might have a pivot point there too. It adds more confluence to that area. So I'm more likely to look for that to be the buy point than anything else. No, just because everything's been pointing up, John. I think you're in the right spot. I just don't think she's ready. So I just think you're early. Hi, Medhat. Okay. Does this make sense? So, you know, I don't see fibs as literal points. I guess that's the. I don't look at it and say, well, I'm only willing to buy the 50%. I don't care it's a 50. I don't care it's a 54.32789%. It's a zone for me, and that's why, you know, that's why I like to use price within the zone to help me define. The actual buy and sell point. Okay, so let's talk about the swing fib first, and then we're going to talk about the move fib, right? So if we're looking at that in the context of a chart, okay, we're going to talk about, for example, okay, we're going to talk about something, for example, like this. Okay, I would consider this a swing fib. All right, and if we're talking about a move fib, we're going to talk about sort of something more like this. Okay, can you see the difference? All right, and I just don't have time today to define why you would look for a swing fib versus a move fib. right? And then this would be a fib of this whole drop for continuation. Often wonder why price moves back to the original swing fib. You know what? I think try and trade it's an interesting question, all right? And I don't want to give you guys pod answers. Okay. You see, I'm going to digress into all sorts of other areas without doing the acronym I'm here to represent. But, so, okay. So in any move, all right, in any move, you're going to get this sort of thing. And I'm going to go very, very fast, all right? Try and trade a 2-minute explanation. And it'll cover your question too, Andrea. Okay. In a move like this, right, let's say we'll use, for example, a 4-hour chart. Okay, I'll forget. Thanks for the reminder there. Yeah, I'll slow down. All right, but if you've got a move that looks like this, okay, right, this is a buy zone. This is a buy zone of this rise. This is a buy zone of this last rise here. Okay, so we'll call this buy zone 1, extension 1, buy zone 2. All right, these are zones that are just sort of correlated to this whole rise. And then obviously there's the buy zone of this whole thing. Okay, now if price is going to go down there, it'll typically do this. In other words, this green zone here is the green zone of rise number 3, and this little red zone is sell point 4 of little move 4 here. All right. Now the thing is that these little red zones exist where the price. These little red zones exist where the price rolls over there or not, meaning that is exactly where other people are potentially going to sell it in a reversal. So in other words, I could do this. All right. So those for me in the context of an uptrend are exactly where you would not want to buy it. Okay. So sometimes it's almost too tight to buy some stuff with spread because you'll actually be into the sell zone, in which case you just don't take the trade. Probably am. George, I'm not an exponent of Elliott, but I think I stumbled on it. I think I stumbled on it just in my general understanding of the market. Okay, so now we've got swing fib. I'm calling them fibs, guys, but they're just buy and sell zones relative to the swings. Okay, and my general rule is you go swing fib, swing fib, swing fib. When the swing fib is broken, you think move fib. All right, and then this should take you back to guess what? The move fib of the drop. So move fib of the rise should take you to move fib of the drop. So this is the sell zone of this whole thing. All right, and then that generally will take you down to a higher low here, and then you'll continue up and make another swing fib before continuation. All right, so and then you come to a little higher low buy zone here, and then you hit the double top and make a little buy zone and continuation. And my favorite trades here, my favorite trades to take are this one here. Okay, this buy zone and this one here. All right, so today I wanted to talk about the actual execution of this trade and the actual execution of this trade. All right, so try and trader's question was, well, why do you often see price do this? How often do you see price do this? Okay, swing fib, and then it heads up. Then you get kind of a quick little continuation, and then a lot of times it'll come right back to where it started from and continuation. Okay, and the truth of the matter is that more times than not, you're just hitting something. What is a hindsight trade? That's your question, MRC? A hindsight trade is the trade when nobody ever loses money and you sound like a genius. it's simply a trade that you saw after the fact. We've all had them, many. Yes, that's all it is. It rates very well, Alan. Yes. Well, I mean, it's absolutely an opportunity. So, for example, if you're looking at your Aussie dollar right now, what do you think is going to happen over the next 24 hours? Yes. Everybody, MRC, just look at a trade you should have taken or could have taken, and that's a hindsight trade. Yeah, I don't know if, I'm not sure if Aussie is necessarily going to reverse, but I think you're going to make a significant retracement, the better part of 80 pips here, coming off right around the mid to late 104s. Okay, and all that is basically this trade right here. That's all that this is right here, guys. It doesn't necessarily mean to say that it's going to fall on its face, but it should at least return back to 103.80-ish. Yep. Right. So this is, well, the truth of the matter is you don't always know English. All right. You know, for example, is the euro short at 32, or is that just a temporary level of resistance for it to come back to around 31.40 and rally off its head? We don't know, do we? But honestly, I don't really care, because I'll look to short around 32, 32.20, take it down to 31.40, and then I'll ask questions later. It's all about probabilities, yes. And honestly, that's all I'm really looking to achieve, is that 60 to 70 pip drop. And then I'll allow price action to confirm a change of direction in that area or break of that area, in which case I'll continue trading. Okay, so guys, we're 24 minutes into this, and I haven't covered any of my webinar. All right, so we're gonna talk about this entry here first, the swing fib. All right, so for me, that is generally a no confirmation trade. All right, only need 1 minute to cover that because there is nothing to cover. If I'm looking to trade, in this case, I think that would have been a little too aggressive for me, but let me try to find a better example. I don't want to have to go searching too far. All right, a swing fib entry can only be taken if there's very little support or resistance around the trade, because it's the most aggressive of entries you're going to take. All right. So let's say, for example, you identified this as a move fib. Okay. And then you saw this potentially as a higher low, and you're looking to grab that swing fib based on the fact that this is coming off a nice support area, and it's in the context of a little uptrend. Okay, so let's say in hindsight that you were trying to buy this. Okay, that is something for me that would be taken with almost no confirmation at all. All right, I would simply look. I'd like my stochastics to be in alignment with the trade, at least pointing up. They don't have to be. I think this is the thing with oscillators that used to confuse me, is people pay attention to the crosses. I think the crosses are 100% misleading. All right, to me, it's when price is actually when the oscillator is actually in the trade zone to the downside or the upside, that helps with a directional bias. I think the cross is misleading because they cross all the time. And that doesn't mean to say that something's long or short. All right. So, yeah, there's a lot of stuff in the archive things that should answer a huge amount of your questions. All right. So a swing fib entry, we're not going to get into the reason why a swing fib entry is what it is. I'll cover that next time. But that to me is no confirmation trade. All right, and confirmation is a little bit of an enigma in trading because there is no such thing really. All right, but it's a trade where I'm just taking on a little bit of hesitation, on a little bit of a green off my support area. Okay, so swing fib entry means no confirmation for me. I'm essentially taking it just off hesitation and time of day. All right, does that make sense? You're just picking your spot based on confluence. You're waiting for a little bit of price action there, and you're going for it. That's it. And you set your stop, and you set your profit target, and you live with it. All right, now, a move fib entry is a little bit different. Okay, so a move fib entry would be something like this. All right, where prices come down, and it comes back to almost the same spot where you're looking to sell it before. And here you've got about an hour and a half's worth of support, now likely to become resistance. There's also hesitation through here. Nice little buy and sell zone there. And going back here, and going back here, and so on and so forth. So this area here, also 103, and I think this was also the central pivot. This sets up, I almost put a green zone there, that would be a little awkward. This sets up a nice little sell zone. Okay, so, but David, how do you know to sell it at 103.05 and not 20? Well, the truth of the matter is you don't, but you've got the most confluence in this area. Nonetheless, though, how many times do you see a move fib sort of trade with a buy and sell zones like 30 pips? Just the sell zone. And then you still got to put stop on top of that, so you're looking at 50 pips of risk. It's quite high, isn't it? So I like to see the actual trigger of a trade. What's actually putting me in the trade is increasing my probabilities to time the trade, but not guaranteeing them. All right. So if a downtrend is defined by lower highs and lower lows, okay, a lower high is the first component to a downtrend. Okay, it's the first component. So I like to look for a little bit of 15-minute, what I call failure in an area of a downtrend to sell. All right. So what I mean by that is this. Okay, if we're just doing this in terms of how the candle is going to look. It's going to look identical to this for me. All right. So price is going to trundle down and then start to make its way back to my prescribed sell area. Okay, so we're going to go green. Right, green. Okay, green. Now let's say it is now in my sell zone. All right, this is my sell zone. And I'm looking for price to roll over from here. Okay, right, now I go into my move fib confirmation mode. All right, and what that means for me is this. I like to look, okay, so we'd like you to get a reaction there. Okay, and you might even get a second candle that sort of takes you down like this. All right, at which point, I like to look for a little bit of green off here. Why would you find green off there? Because I'll answer my own questions in the interest of expediency. You're going to find green off there because you got people trying to buy the little swing fib or the rise here. Okay? Now, after you've shown green here, normally you get a candle. And I'm looking at this. By the way, I neglected to tell you that typically I'll drop down into a 5-minute or 2-minute chart around this area to try and refine the entry a little bit better. Okay? And basically I'm looking for it to create a lower high. Now the thing about lower highs and higher lows is that we don't know that that happened until that happened. So there's an element of speculation in there. There's an element of speculation in their creation, isn't there? All right, because how many times have you thought something's a lower high and it just continues higher? For example, this. How many price does this, comes down, makes a lower high, and immediately just does this? Oh, no. And you've shorted here. And then you're like, oh, okay, well, that's not good. All right, but I have a strategy for exiting with very little loss on that too. Anyway, all right, so let's get back to this. So move fib entry. All right, then if price, once it comes off the higher low, if price makes an immediate lower high there, I'll short. Okay, in other words, to me that's a failure because it had every opportunity now to go and break that resistance level, but it's just proven to you that it cannot. All right, at which point then I like to see, obviously red, and then typically you'll get green here as it comes off the little fib of the rise and a continuation to the downside. Okay, and a lot of times people get knocked out here. You'll short here and then it'll come up, make a lower high, and with spread and things you get knocked out and then it moves in your direction. You're like, well, hang on a minute. Try and trade it just for the benefit of this conversation. Yeah, I'm just talking about pullback trades. I also like to use this for turning point related trades. Okay, so the question is, if it prints a green candle directly after a red here, then if it breaks this high, then I'll exit. So if I get an immediate higher low after my lower high, then I'll look to exit. Okay? And often what's happening is it's simply going to the next level. It doesn't necessarily mean that it's not going to drop. It's simply going to the next level, in which case I'll employ the same confirmation at that next level for a continuation to the downside. All right, does that make sense? I don't know if I've articulated myself accurately here. But what it, and if it doesn't make, let me know. Okay, so let's talk about exits. All right. A couple of strategies to help you with exit. I love pivot points. How many of you use pivots? And I should have probably done a whole dedicated webinar on exit. I might do that next time. I would highly encourage you to investigate some pivot use. I think you'll be astonished. All right? I mean, there's a reason here. There's a reason here why we bottomed out here and we turned there and bottomed out here and turned here and bottomed out here and topped out here and bottomed here and topped here and bottomed here and topped here. There's a reason for that. So I actually based them off of 8 a.m. Tokyo time, Axel. Okay. All right, so you see pivot ranges, you see this little custom plotter, but I got a download here. I'll just throw it in the room for you. And Andy beat me to it. Andy, you couldn't just let me be the hero. There we go. All right, thanks, Andy. Actually don't have R3 on this, to be honest with you. I appreciate it. All right, so anyway. So we got 10 minutes left yet. I mean, I'll do my best. We might have to just continue this next time. All right, guys. So first things first, average daily range, average trading range. I want you to apply a more common sense approach to that. Okay? A more common sense approach to this. So, if the average, how many of you look at something more like an average session range? And you don't even need to think about it in terms of, actually getting the data and looking at it. But what do you think is the average session range for an Aussie dollar in London or New York? If you were to give me a figure, what do you think the Aussie would move in any typical London or New York? 50 to 60 pips? I'm not talking about the whole day. I'm talking about, and when I say range though, right, so in other words, if it does something like this and heads up, this here might be, something like that would be a London session, and that would be thank you, George. We'll call this 60 to 80 pips, reasonably speaking, for Aussie. Okay, for any given session on the day. And it's an average, right? What did you say about the pound? Now, the pound has been a little bit of a lame duck lately, and honestly, the average daily range of the pound over the last 3 months is 104 pips, which I've been trading almost 7 years, and that's preposterous. Okay? But under normal circumstances, what do you think the average range for pound is in any given session? About 80. It's a little higher. Typically, we'll call this 80 to 100. All right. What about euro? Euro is probably right in between. So we'll call euro 70 to 90, and so on and so forth. Euro yen, depending on the positive correlation, 90. All right, maybe a little bit less. Okay. So if prices moved, okay, so let's say you're looking at the Aussie dollar, all right, and we're using averages here, we're using probability. Let's say we're using the Aussie and prices moved up in a move, it's moved up 50 pips, and it retraces 20. What do you think, providing there's no massive resistance up here, what do you think the extension move is likely to be roughly? Probably about 50 pips. Okay, probably about 50 pips. A lot of times this initial move will just double the original move. Okay, and if it came down to a move fib here, it's probably going to go up the extension of this rise. All right, so I want you to use some common sense stuff with regards to targets for trades. All right, if something's gone 1,000,000 miles, chances are it's not going to continue 1,000,000 miles. It's probably going to continue the balance of the range. All right? All right, so that's number one. Okay, is a little bit of common sense approach to average daily range. All right? Now, I like to use pivots too, all right? If you are coming off a central pivot, you can target your reversal pivot. So yesterday, I think we had, I want to say 31.40 on the euro as a target, and that, or rather 31.56, and that was based on the fact that we were coming off M3 and potentially going to M4 for the day. Yeah, but I don't think I could take the euro on a swing fib because of the resistance that we've come off of. I think euro is pretty longable around 31.40, but going to be short. People are going to be lined up to short at about 31.65. All right, now let's take this Aussie into account here. Let's say on this 4 hour, all right, let's say on this 4 hour that the Australian dollar now wants to, okay, so this, would you guys agree is resistance here? I know that's a large range, but swing low, hesitation, swing high, chances are we're going to find some resistance here. You also got a weekly M4 at 104.96. Okay, So the next trade, I think, you're going to come down here, come with this 4 hour 5, jog up, and then you're going to roll over in all probability before potentially continuing higher, which is the level of expectation that you guys have for the most part. All right. But I think the first reasonable trade is a short in the late 104s. Okay. So how would you project a target on that short side trade? Would you be swinging for the fences? In other words, if you got in a short up here, if you shorted somewhere in this spot, where do you think, in all likelihood, that's going to go? I'll take Aussie short for 200, please, Alex. Dun 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 dun. Yeah, probably like a little fib of the rise. Well, I think 103 is pretty. I would say 103 is pretty ambitious, to be honest, because you just got a 4 hour change of trend here. So chances are we're going to do this before, I think, continuing some of that action. That's just my 2 pips on it. Yeah, you're probably gonna come down here to the next support level. All right, previous swing high, a little wick there, hesitation through here, and it looks like a 382 of the rise. I don't know, I don't care. All right, but the bottom line is, this is moreover your target, and you can even get more conservative than that, considering it's been in an uptrend for the last few days. So chances are, you're going to try to drop it from the late 104s down to probably 103.80 to 103.90. All right. So targets also need to be specified based on a reasonable level of expectation for where you're going to go to. Okay, and where the visual level of support or resistance is, and where the next confluence zone is. They act like magnets for price. All right, does this make sense to you? Okay. Now let's say that you were taking a spot / scalp trade off this area. All right. So let's say that you got your desired price action around 103.80. Where do you think you'd be targeting in a little quick spot scalp trade? About a 50 pipper. Right? About a little 50 pip trade, because chances are it's going to bounce off here and head to move over the drop. At which point your spot trade's pretty over, because you're going to likelihood retrace the entire drop there or the entire rise before continuing. Okay? So this trade here would simply be a fib of the drop, about 50, 60 pips. However, this trade, the higher low, which is your confirmation on a 4 hour move fib, all right, remember we did our little failed low exercise on that 2 minute I showed you earlier on, would be a confirmation just on the longer term time frame for the move fib of the rise. All right, now this trade, you'd prospectively be looking for something a little more ambitious. All right, that would be more like your little swing trade entry. All right, in which case you'd be looking for maybe 150 pips. Okay, and potentially get in Asia Monday, and you try and take that thing up a pretty good clip, providing the GDP numbers don't kill everybody. All right? So, a nice tool to use are pivots primarily for me. Support or resistance on other time frames. Average daily range / other average session range, so to speak. All right? And then you got to also take into account sort of the trend that you're in. Is this a counter trend trade? Because when you're trend trading, price does this. When you're going counter trend, price does this. because every support and resistance level is bought. So in other words, if you get in the long and you go break even, you get knocked out. If you get in the long, you go break even, you get knocked out. So it's better to take 40 pip chunks here. Have you guys noticed that in an intraday move, 40 pips is about your average before price starts to retrace? Like if you said to yourself, well, I took profit at 32 pips, you get a lot more 32 pip trades than you do 110 pip trades. The reason for that is because these average swings are about 40 pips. Okay, it's just the way of the jungle. It's just the way things are. Okay? So, everybody wants the massive, ambitious 128 pip winner, but I promise you can nickel and dime the market 30, 40 pips at a time, guys. That's where it's at on an intraday level. All right? You've got to be very lined up to capture multi-100 pip trades. Just take into account the euro today. Right? Look at these swings. 47 pips. 47 pips. You think there might be something to that? And the other thing is also fib extensions too are helpful here. 618, 1382. Anyway, guys, I'd like to cover, next time I'm going to cover more about targets because I think we just scratched the surface. I just gave you stuff to think about, but I need to elaborate much further than that. We need to look at about 20 examples. Absolutely. Yes. And it also, a lot of things just depend on trading style and what you're comfortable with getting in and out of the market, how active you really want to be. Yes, it was recorded. Okay, so I just want to let you guys know that every day at FX Bootcamp we run like an hour-long free room that if you just go to fxbootcamp.com and log in, I start at 10 Pacific, 1 Eastern, 6 a.m. London time. All right? Every day I start at those times, and I run through my analysis for the day, and I put together about 4 or 5 trade plans, and it's 100% free. So if you're interested in that, by all means log in and pop by. All you're going to do is fill in your details, set up a little profile, and off you go. It absolutely is, Colin. Should be fine. Well, not at the moment, but tonight at 10 Pacific, it will be open. And guys, if you're having login problems, please email me. Okay? Please email me, David at FX Bootcamp. I'll get you squared away. It's simply fxbootcamp.com, Jez. Okay. Are there any questions? I don't know. I know I'm out of time. I don't want to. Thank you, Alan. Yeah, and like I said, if you're having issues, by all means, let me know. And guys, Forex David on my Twitter. And how many of you are coming to Barcelona in June? Good chance. Well, please make the acquaintance if you're there. Look forward to meeting everybody. All right, guys, if there's no questions, I'll catch you later. Forex David, if you have anything on your mind on the twit. But otherwise, I'll catch you soon. Cheers.